where they'll say they've got a Wyoming LLC or they've got an LLC in a certain state. Do I need to move to Wyoming if I want to start a business? Is it?
My mentor used to say this before it got popular, right? If you stay ready, you don't have to get ready, because you never know when you need to be ready.
Yeah.
And so you don't know when the IRS audit is coming. And when it comes and you're scrambling, you're going to miss something. And it may make you look bad.
What's going on, everybody? This is Marvin, your brother, your uncle, your favorite realtor's favorite realtor, coming to you with another installment of the Equity Podcast. I'm super excited for this episode because I brought on a good friend of mine, Mr. Camari Ellis, aka TheFinanceRebel. And before I introduce him, I want to walk through the fact that me and Camari, we go back like neck braces and spinal cords. He was so gracious to be a guest on a previous podcast that I was a part of. We want to get you guys in check and right and tight for the IRS and to kind of walk through and demystify why an audit is something that you can very easily avoid with some strategy. So Camari, how are you today, brother?
Good, Marvin. How you doing? Thank you for having me.
You know what? I'm good today. It's a beautiful day here in Atlanta, Georgia. Camari and I, like I mentioned, he is actually a part of the Philly tax team. He's crushing it in the Philadelphia area. He is an enrolled agent, and we're going to walk through what exactly that means compared to the folks you see in your H&R blocks and CPAs, because those are very key differences that Camari is going to break down. He has been a guy that if you are not following him on social media and on TikTok, please stop this podcast, click his information in the show notes, and connect with Camari because he is always dropping gems. So Camari, we're going to jump right into it because social media is giving a lot of information, in most cases, misinformation. So tell the folks, Camari's not playing no games today. So Camari, tell folks a little bit about yourself and what makes you qualified to have this conversation with the audience.
Oh, man, that's one of my questions I'll be asking my guests. Great one. Well, again, thank you for having me, Marvin. My name is Camari Ellis. I'm an enrolled agent. I'm a native of Philadelphia, born and raised. Went to Temple for finance, but I got into this business because my daddy was in the business, right? My daddy was a tax accountant. I'm now a tax accountant. My dad would have me come to his office every day after school because I was a latchkey kid, meaning nobody was home, right, when I got off from school. So he knew I was probably going to be up to no good. So he said, bring your tail down to the office. So I would go to his office almost every day after school. And to a point, I would like wreak havoc because I was a kid, do all kinds of stuff, disrupt his employees. And he said, you know what, son, you want to do something productive. You're going to learn how to do these taxes and some books. And so he started making me learn how to do those things. Hated it at the time, but I didn't realize I was being blessed. Because, a lot of times you don't even realize you think a punishment is a punishment and it's really a blessing in disguise.
Absolutely.
My dad was able to, expose me to a lot of positive people, Black business owners, Black educational people or people in education, fire people, police people, all Black, all progressive, all good people, all good stewards in the community. So, I got to grow up seeing a lot of that. But like I said, I hated tax. And what happened was my dad got sick and I had to kind of run his business for a while. And I ran it and people like me. Sometimes they like me more than they like my dad. Because my dad has this tough exterior. I didn't understand it at the time. I get it more and more now as we get older, right? It's funny how we always try to run away from being our parents and wind up becoming our parents. But that's another story for another day. But full circle, like I said, I went to Temple, majored in finance. I'm more of a finance guy. I like the future and the possibility of the future and money. And so I like finance. But after the stint of working with my dad running his office, I could never get rid of my tax clients. And so I ran a couple of businesses. I was referring tax clients away. They all failed. The one thing that stayed true and stayed consistent was people coming to me to get their taxes done. And then I ran into an old boss of mine because I've been running from him. He said, well, Camari, you might want to take taxes seriously. It's an honorable thing. It's a great thing.
Absolutely.
And then I did. And then we're here now. And I really see the beauty of the blessings that I was receiving at the time. And I see now that there's so much strategy and there's so much opportunity to help people and to make a living for myself and my family that The sky is truly the limit. I didn't see that though when I was growing up. I only saw people, like you said, maybe worked at H&R Block or did some other things, and everything was how to get a big refund. And now I'm like, I really don't care if you get a big refund. Tell me how accurate and correctly your tax return is done. Tell me what the strategy is to reduce your tax liability now. I could really I don't care about your tax refund at this point. And I know that's like appalling to some people. Like, what do you mean you don't care?
Right.
But here's the deal. Anybody that makes money is going to pay tax. The question is, are you overpaying in taxes or are you paying too much? A lot of us involuntarily tip Uncle Sam way too much, and Uncle Sam is not really giving that great a service. Now, I know that could be debatable too, but you get my point.
And I think that it's key to remember that, you know, the IRS is not the boogeyman.
They're not.
They're in place to keep bad people from doing bad things that could have an adverse effect on the greater economy in general. So we'll talk about, when you hear people talk about, well, I pay zero taxes, this president pays zero taxes, this corporation pays zero taxes. The game is to be sold, not to be told, or I hope I said that correctly, but the game is out there. And it's up to us as business owners, because if you're listening to this podcast or watching this on YouTube, you're watching it because something about you has a desire to move towards entrepreneurism. And real estate investing and real estate in general, obviously, is the way that I do it through this platform. But you can use this information for whatever it is that you feel that the good Lord is putting you to start. So Camari, I've seen on social media, and that's why I brought you on as the professional, but I've seen on social media a couple different types of people. I've seen the folks that are the folks that work at like H&R Block and things of that nature. I see CPAs. I see enrolled agents, that title that you just mentioned you are, and then I see tax strategists. What are the differences between these, and is one more important than the other?
It's all relative, right?
Okay.
Meaning it all depends on where you're at in life and your business and what you're trying to do. Just to kind of give you a summation of what the biggest roles are in the tax world, you have unenrolled agents, people who, you know, who are not CPAs, not EA,
Right.
not tax attorneys, right? There's a doctrine or a thing called Circular 230 in the IRS. So if you don't meet the specifics of Circular 230, then you can't represent or help tax preparers represent themselves before the IRS. So that's unenrolled agents or unenrolled preparers. They're just, you know, people that like to do taxes. There are some people who actually like to do taxes, and some people make good money doing it. Then you have CPAs. Everybody knows about CPAs. The AI CPA spends a lot of money on marketing. They are, quote unquote, the gold standard of accounting and tax right now. But CPAs are the kings and queens of accounting, not necessarily of tax. So tax is only one part of the CPA exam. It's not that. I mean, I get referrals and clients from CPAs because they don't want to do taxes. Not all CPAs do taxes. Then you have the enrolled agent, right? The enrolled agent is a credential of the IRS. It's given by the IRS. Some will call it the America's tax expert. We are authorized to operate in all 50 states versus CPAs are only allowed to operate in a state that they are licensed in. So it's a state by state thing. And then you have, you know, tax attorneys, excuse me. You know, people that went to law school, passed the bar, they are also considered Circular 230. They can help people with their tax issues. Some attorneys even do taxes, but it just depends on where you're trying to go. Now, you asked about tax strategists. Out of those, three credentials or four credentials or fields, right, within the tax, some people just do data entry. They just do the tax return, right? And that's nothing against them. Some people do the tax returns and they like to implement some planning, some strategy. It's hard to do that sometimes, though, because a lot of times the clients don't want to pay for that service.
Got it.
Right? Because it takes time. And then you have some people, all they do is planning and strategy with their clients. You know, you talk about presidents not paying, you know, we can talk about Trump and the 750. He has a whole fleet of attorneys and CPAs and other enrolled agents that work with him to try to keep his tax liability down. Now, Whether it's legal or not, that's a whole other conversation.
For sure,
um,
for sure.
but I mean, we've seen that play out. But
Right.
it just depends on where you're at. So if you have a W-2 job and you're just working 9 to 5, you might just need somebody to prepare your taxes if you feel it's a little bit too much for you to take on.
Got it.
If you want some strategy, you probably want to start looking at enrolled agents, CPAs, and tax accountants, or excuse me, tax attorneys, to start looking at strategies. They're usually in one of those fields. They usually have some of those credentials.
Gotcha. So, well, it's if I'm understanding you correctly, your 9 to 5 W-2 folks, they pretty much, if they've just got straight, what their income is what's on their W-2, they probably would be fine using the H&R blocks, the turbo taxes, things of that nature.
Yep.
But of course, this podcast is about building equity, and you can never build equity with a 9 to 5 job. So, I want to speak.
Well,
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 unless you get stock in it and stuff like that, right?
and if
But
so you posted something earlier that
yeah,
I shared from one of our first recordings.
right,
Use your job to finance your freedom, right? So if you're saving and you're doing some things and you start as a side hustle on
right.
the side, then yeah, you still might only need a unenrolled or unenrolled preparer to
Okay,
do your stuff, but it depends, right? So everybody's situation is different. Everybody's
gotcha.
situation is different.
So let me ask you. So for the folks that are real estate professionals and real estate investors, I get this question quite often because I lead a team of real estate agents, and I am also a real estate investor.
You're
So
busy.
what? Yeah, I try to be, brother. I try to be. What is the best business entity for most entrepreneurs, and why is that? Because I've seen corporations, I've seen LLC, I see a whole bunch of stuff on social media. So, as the professional, what is the most advantageous business entity that you can start today?
So you and your audience are probably going to hate me for saying this.
Uh oh.
It depends.
Okay.
It really depends. Everybody's at a different level, right?
Yeah.
You said you lead a team of agents. If you're a brand new agent that's coming into the game and you're getting your commissions, it's probably just best to get it as a person, as a sole proprietor under your social security number,
Yeah.
right? But now you're starting to do multiple deals and it's predictable. You're doing, I don't know, 100, 200 deals every year. And I know deal size matters in commission,
Right.
but you're making good money every year. Then you might want to start looking at some other entity choices, whether it be an LLC, whether it be an S corp, things like that.
Yeah. And what is an LLC?
LLC stands for a limited liability company, not a limited liability corporation, as we see a lot of time on these trash streets on social media. Um, but that's what it stands for, limited liability company.
Okay.
And for the IRS, right, I want everybody to be clear on this. The IRS does not care about your single member LLC. They still treat you like a sole proprietor. And
Mm.
so it's still good to have, potentially, if you have some assets and you want to protect them
Right.
because you're scared you might get sued. Now, I will say this, a lot of people who get the LLC, they don't think about getting insurance. I would say get your insurance,
Yeah.
max it out, umbrella, liability, whatever you need to get
Right.
before you get the LLC, and then get the LLC if it makes sense for you.
So, if I'm understanding correctly, an LLC essentially is more of a protection for an individual so that they can't be sued directly. For example, if you're a real estate investor, you have your home in under your LLC, somebody slips and falls, then they can sue the LLC because that's the entity that owns that property, but they cannot come after Marvin, the person, for my personal assets. Is that a fair
In theory,
understanding?
that's correct, but there's always caveats, and there's
Yeah,
always
yeah,
times where people have been sued even though they have a quote unquote LLC. So
right,
nothing is foolproof, nothing is absolute. And I am not an attorney. So don't
right.
say Camari's out here on these streets giving out legal advice.
Of course, of course. And I think that it's just, if you want to be taken seriously as a business, I personally think your first step is by getting your finances separated and doing your business transactions under through a business type of account, and then anything that's not related to your business, not doing that through your regular checking. For the brand new entrepreneur, would that be a great way to start, as far as to start thinking about, okay, for this dollar that I have, I'm going to put this dollar, if I earned it, under my business, as a real estate professional, as a commission or through rent that I'm getting as a real estate investor? Should I put this money in my personal checking account or should I put this in a business checking account, typically speaking?
Typically, it's best to put it in the business checking account. But if you're brand new, brand spanking new, you don't have, I was going to say something, but I know this is a family friendly show. You don't have much money. You can start off and get established and get your legs underneath you. And, the money going into your account is good. However, when tax time comes around,
Right.
it might be a bit challenging because you're going to need to be able to figure out what tax deductions you might have working in that business.
That's a good point. That's a good point. So with that being the case, because that actually led into my next question. One of the things that I've noticed, Camari, in my business, when I started a business while working the 9 to 5, because you're absolutely right, guys and girls listening, use your job to finance your business. You can walk and chew gum at the same time. The only thing is that if you are solely a W-2 employee, the tax code does not favor you as much as it favors individuals that are moving towards entrepreneurism. So one thing I noticed in my transition is that the things that I was not able to write off as a 9 to 5 worker, I am able to write off as an entrepreneur. So high level, what are some of the things that folks as business owners, just a few things that they were not able to write off that typically as a small business owner you can begin to write off?
So most people working a job cannot write off a portion of their cell phone bill.
Right.
So if you have a cell phone bill, more than likely you can write off your cell phone. Now be careful. If you are to ever get audited, they're going to say, hey, is this cell phone being used solely for your business? Or is your boo calling you? Is Nana and Pop-Up calling you? Do you use it for personal reasons? And if you say yes, they're going to say, all right, you can't write the whole thing off for business. So I usually say just write off 50%. You can justify 50%. Right. Then as you get bigger, you might want to look at getting a separate cell phone or something like that. You can look at writing off bills, business meals, right? If you take out, again, we're going to use it as an agent, a real estate agent. You're taking out a new listing client out to a lunch or coffee. You can write that off. One thing I tell folks to do is try to get an app on your phone and take a picture of the receipt every time you go out with them. Write on the receipt who you met with, who it's for. That helps to audit proof you just in case you're ever audited.
That's a good idea. I didn't think about that.
Yeah, because if you're ever audited, people say, well, can't I just show my bank statements? You can, but how do they know that charge at Starbucks is for you and not for you and your boo? Right. So if you have this level of documentation, you can say, I took this note on the date. Here's the picture of it. It's on the receipt. Right. It at least shows that, you put forethought and are trying to show that this is really me. This is what I do. Another warning. I've mentioned receipts.
Yeah.
If you are a person that likes to say receipts, don't. They fade. They fade so fast nowadays. It's crazy. So again, I take an app picture. You take a picture, send it to your, you can create a designated email for that, or you can have an app like QuickBooks or anything else like that. Take a picture, sync it with one of those things. So you can have it, because those receipts fade so fast.
Yeah.
You'll never be able to use them. One, for doing your taxes to figure out what you spent. Two,
right.
to defend yourself in an audit if by chance it happens.
And I think it's also, if you don't have the money to go get that app that does that, I mean, if you're an iPhone user, there's the Notes app. You can create a little folder within the Notes app, and then they now have the capability on most iPhones to scan an image, and it'll automatically save that receipt as a PDF. And then within that same note, as you mentioned, Camari, you can say dinner with Bob to discuss a listing agreement, or dinner with Sam to discuss purchasing his land. I think that's genius to keep track of it at some point, because I think that's the scariest thing about when a person is audited is not having a paper trail at all. And they're scrambling, they're stressed out, trying to find documents and what matches this or that. And I think proactively, it's a fantastic idea. Even if you haven't made your first sale, even if you haven't closed your first real estate deal as an investor, to start tracking that information absolutely from day one.
Yeah, you definitely want to do it from day one. My mentor used to say this before it got popular, right? If you stay ready, you don't have to get ready,
Yes,
because
sir.
you never know when you need to be ready.
Yeah.
And so you don't know when the IRS audit is coming. And when it comes and you're scrambling, you're going to miss something. And it may make you look bad. So you want to develop the habits now to have a strong case no matter the weather.
Well, let me ask you. So, what would be someone that has had their business, they've been doing business for a while, they've been keeping track of their expenses, for lack of a better word, on the back of a napkin. But in the new year, they want to get right and tight with their business and be taken seriously from a business credit standpoint. Dun and Bradstreet will walk through what all that means. If a person has not reached out to you, Camari, and they want to get things cleaned up, what are some of the things as a tax professional? What are some of the things that would make your job easier when folks come to you and say, I hadn't used anybody, I've made X amount of money, help me, Camari?
The first thing I normally have everybody do is set up bookkeeping. I use QuickBooks. That's not a commercial for them. They're not paying for ad space today, but that's just what I use. If you have another app or service you use, that's fine. But your books are really the lifeblood of your business. It's going to dictate what you can do through financing. It's going to help you with planning. It's going to help you with tax savings, potentially tax savings. So you want to give some real serious time and consideration to doing good books. What are good books? Well, let's back up. What's bookkeeping, right? Bookkeeping is tracking any financial transaction you have, whether it's money you receive from commissions or maybe some kind of finder's fee or something like that, or the money you are spending. So it's the way that you keep track of all of that.
Right.
And ideally, you want to have that kind of centralized into one place and set up. So I normally have them set up with their software. I have them link their bank accounts to the software so it pulls the transactions down.
That's smart.
And then you categorize the transactions over time and try to stay up to date. Now, I'm gonna be totally honest and transparent. I don't keep books as much as I would like to for myself personally,
Right.
but I have it set up that everything's going in there, that I have certain things, rules and everything set up, that it does certain things. So it's kind of on autopilot. I don't necessarily tell everybody to do that, but they can do that. And so when it comes time, when you get some downtime, you can say, all right, I'm going to knock these books out. Or when we do get the tax time, it's not as heavy of a lift as you would think it is. The key thing is have a tracking system, have a tracking system tied to your bank account. That also your credit cards, if you have business credit cards, make sure it's tracked to that, and make sure you're categorizing on a fairly often basis.
Gotcha. Now, if you're watching this on YouTube, you can tell that, of course, Camari is in his fabulous studio. Make sure if you're getting value from this and you're on YouTube that you hit the thumbs up button. And if you are listening to this podcast, make sure you give us a 5-star review. But I want to walk through, because we're kind of in a little bit of a hybrid world that we're in right now. We're in the world where going into an office is very quickly becoming a thing of the past, because we're coming out of the pandemic. Many of us, virtually all of us, had to work from home. So what are some of the potential benefits? Of course, I work from home mainly. I'm here in my studio now, home studio. But what are some of the potential tax implications or benefits of having a remote situation or work from home situation?
So work from home, remote locations are actually great. You can write off a portion of your mortgage interest or your rent, any real estate tax, any interest that you're paying, any insurance, even some maintenance costs, and maybe some renovation costs as well.
Oh, wow, I
Depending,
didn't know that.
yeah, depending on the situation. However, this is where a lot of people get jammed up.
Uh-oh.
It's supposed to be exclusive office space. Exclusive means that it's dedicated to your workspace, where you're doing things. It's not a guest room. It's not a kid's playroom. It's not any of those things. So again, you have to keep that in mind. You got to keep that in mind.
So basically, I got to move the baby crib out of this office and to another room.
You might be able to get way of that, but you know, if your baby's still super duper young,
Right.
But for the most part, no, baby's not supposed to be there. No romper room, no nothing like that.
Well, that's great, and I think also having a set space where you got a door that you close, I think that would be great just from tracking because I know you can write off, you have to write it off based on the square footage and whatnot.
Yes.
So it's fairly easy to do that when it's, as you mentioned, a dedicated room. Now, are there any tax perks or credits or benefits that are on the horizon as we're landing the plane here? What are some of the things out there from a tax perspective that folks may not be aware of from a credit standpoint that we should be taking advantage of as small business owners?
Well, I won't say that there's anything coming up new, but
Okay.
some of the credits and well, some of the tax are going to change.
Mm.
24, 24 and 25. A lot of the Trump implementations that came in 2017
Yeah.
are going to close out or going to end unless Congress extends them.
Okay.
Some of them are like the whole SALT issue, when
What
you
is
can
that?
only write out. So SALT stands for sales and local tax and
Okay.
anything under that. So under that regime, they capped what you could write off for real estate tax. And you know, a lot of our East Coast families hate that.
Right.
You could only write off up to $10,000. Now, some are lower places, it might not be that big of a deal, but for more of the East Coast, West Coast folks, they definitely are looking forward to that expiring.
So, is there anything? Do we need to write to our congressmen as business owners? I mean, what can we do just to kind of proactively get ahead of it, or we just is it looking? Well, let me ask this way: is it looking from from an inflation standpoint, from where our economy is now? Is it looking like something that more than likely will go away, or do you think they'll extend it? And I'm not holding you to it, but it's just my
No,
want
no,
to
no.
get your
I think so. Congress right now is split. The House is controlled by Republicans. The Senate is controlled by Democrats. Who knows what's going to happen in this next midterm? I think there's a high probability that it's going to go away.
Oh wow, okay.
Yeah, and
So
that's a
that
good thing. It's a good thing. But there's some other ramifications that go along with it as well.
got it. Got it. Okay. Well, that's good to know, man. That's good to know. And I feel like I'm of the mindset, wherever we're at with things as far as tax benefits, perks that are out there, take advantage of it while the getting is good, as we say here in
Agreed.
the South. And so when a person says, okay, I'm to the point to where I'm ready to build my business and sell my business. Is there a certain way that a person from a financial standpoint, is there a specific way that one needs to be structured if they're interested in eventually selling their business? Is it something that they would need to reach out to a person like yourself or a very special or another specialized position to put themselves in the best position possible to build something that they can sell?
So there's no best entity, right? I mean, people sell sole proprietorships, people sell LLCs, people sell corporations all the time. It just really depends on what you and the person are coming to. But
Right.
evaluation specialist, there's a whole field, the specialty for that. Um, just look up evaluators,
Okay.
or not appraisers, yeah, business evaluators, because there's also business brokers as well.
Got it.
They'll help to figure out what a fair price is for your business. And then a lot of times they'll come up with different ways to finance and get the person out of the business, the owner that is, and get the new owner in.
Now, to that point, I have seen a lot of people where they'll talk about how, just circling back to the LLC question, where they'll say they've got a Wyoming LLC or they've
Mhm.
got an LLC in a certain state. Do I need to move to Wyoming if I want to start a business? Is there what's the deal with that? I've always wanted to know because I've seen, again, all of this stuff is based on social media, so I'd like to get some clarity. What is that all about? And I'm here in Georgia, so does that mean that I'm in a not good state to own a business? What's the deal with that?
I don't think Georgia is one of those. I know Wyoming, let's say Washington, Nevada, people love Delaware.
Yeah.
But no, you don't have to move. What they have is in each one of those states, they're typically more favorable to corporations.
Oh,
Um,
okay.
And so they use that tactic to lure more businesses there. But no, you don't have to move to a Delaware or Wyoming or a Washington or Nevada. Normally, what they have is registered agents where they'll set up your business, they'll set you up with the state and the IRS, and get you ready to go. However, for most businesses, it's overkill. It's total overkill because I'll use Delaware. This happens a lot. So I'm in Pennsylvania. Delaware is right next door. If you register your business in Delaware, you have to file a return in Delaware. And let's say you're doing business in PA, you have to file a return in PA.
Oh, wow.
And so this is funny because I have a client who's like this. He's actually a good friend too. So he's so concerned about trust and anonymity and trying to reduce taxes that he lives in Delaware, created this PA LLC to own some property in it, and it created a bigger tax bill for him.
Oh, wow.
And he doesn't necessarily have the revenue to really justify having it at the time. So at the end of the day, everybody's talking about own nothing, control everything. Sounds great. Sounds sexy. Sounds sweet. You ain't got the cash coming in to really justify this or sustain it. It's a waste of time. And so I would say focus on getting your revenue straight first. Yeah.
So don't buy that Lamborghini because of the 6,000 pound rule.
The Lamborghini, the G-Wagon, the
Right.
Rolls Royce. Yeah, forget all them.
Okay.
Mostly.
So
I mean, because I'll just say this last thing, right? Everybody promoting that. It's terrible. You're putting your money into a depreciating asset. It's not going to get anything back. You'd be better off putting your money into some kind of retirement account or pension account if your money is kicking off that much cash, that much revenue, because then you could take that money, possibly get loans on that money, buy other assets. The money's growing in some kind of vehicle.
Right.
That's more of a cheat code than buying a stupid vehicle.
Man, I wanted to look cool on Instagram, Camari, and you
Me
just
too.
ruined my.
Me too.
So this has been an amazing time walking through how to get yourself right tax wise from an actual tax professional. Camari, give the good folks listening, some parting game, some parting insight on, what they need to be thinking about from your lens, for example, going forward as it relates to their business.
So I'll say this, right? We started it off. Social media tax advice is trash. I'm on there. I don't give tax advice per se. I give tax tips and guidance, but seek the counsel of a professional and pay them, right? Because garbage in, garbage out. If you get garbage coming in and you're implementing it, all you're going to do is get garbage out and garbage results. Pay somebody who's credible, who has experience, that can really guide you on your path in business. And the other thing is sure, some of those things on social media are factually true, but do they really apply to you and your situation? Personal finance is personal. Your tax situation is going to be different than everybody else's. So make sure whatever you are doing, it's to better you, your family, and your community, and not just somebody else's likes on the gram or TikTok.
I love that. That's absolutely true. And Camari, you couldn't have said it better. I think we're going to drop the mic on that point. Camari, how can folks connect with you and keep up with what you got going on?
So I'm the founder of the Philly Tax Team. You can find me online, the Philly Tax Team. I'm starting a new YouTube channel. It's not up yet, but you could also find me on the TheFinanceRebel everywhere. YouTube, Twitter, IG, even TikTok a little bit. So I'm not dancing on TikTok, but I'm over there.
Camari's always dropping gems on social media. So please be sure to give him a follow. Let him know you found him from this podcast. And thank you so much, Camari, for helping give folks the right frame of reference and helping folks moving in the right direction. Because at the end of the day, we want to build something that is built the right way on the right foundation and ultimately sell it. That's the objective of any business owner, is to at least have the flexibility to live off the income that they're making legally, paying their fair share of taxes.
Absolutely.
And if they decide to, eventually selling that business. So thank you so much, Camari, for being a guest on today's podcast. And until the next one, this is your brother, your uncle, your favorite realtor's favorite realtor signing off. Let me know in the comments below, if you're watching this on YouTube, what insight or what game that you got shared from either Camari or myself, and how it's going to help you grow in your business in the new year. All right, guys, to the next one. Thank you, Camari. I appreciate you again.
Thank you.